Canada's new mortgage rules are here, slashing down payments by more than half for all home buyers. This will have an impact on all home buyers in Canada, and Canadians will be able to afford higher priced homes with 50% less upfront money. And on top of all of this, first-time home buyers will now be able to amortize their mortgage for 30 years, up from 25, and it gives that cohort, the first-time home buyers, 10% more buying power. Here's the crazier thing. You only need one first-time homebuyer on title for this to be effective. Yep, first-time homebuyers are going to be thanking Justin Trudeau for this free money, but this obviously comes at a cost. There's no free lunch, and even the Bank of Canada is calling out the Liberal government for these drastic mortgage rule changes that are going to have a big impact on the real estate market, which I'm going to get into more detail later in this episode, so make sure you stay tuned. Will there be more harm than help? It begs the question whether Trudeau is pandering to the millennial cohort who are just trying to buy their first home right now in an attempt to win their votes. The timing is a bit, rather big of a coincidence if you ask me. And I'll be covering these rule changes in more detail and let you know which part of the market is going to feel these mortgage rule changes the most in this episode. Hi, my name is Zen, and if you're enjoying my data-driven and number-crunching real estate updates, be sure to like and subscribe. Now that the mortgage rule changes are firm, this is what you can expect from these new mortgage rule changes that will have, I would say, a fairly sizable impact on the real estate market in 2025, especially with the rate cuts coming. So for all end users, meaning as long as you live in the property, you are able to buy a home up to $1,499,999 with less than 20% down. This is not just for first-time homebuyers. It's for everyone. How they're going to police this end user thing, it's kind of beyond me. Soft mortgage fraud, hello. Now, which part of the market will see the biggest impact, in my opinion, is going to be the entry-level freehold space. While I don't think most buyers will push up to the $1.5 million price point, the 3-bedroom, 2-washroom with parking semi in Toronto now is a very viable option under these changes for most buyers. Your move-up buyers who are selling their condos and were lacking the down payment to be able to make the move can do it now. There's going to be a big impact in the Toronto freehold space. I would say somewhere between 1 mil to like 1.35 mil. The other area where this will have a big impact is in the suburban entry freehold market as well, which will likely be your towns and semis between 1.1 million and 1.3 million. So your York regions, your Peel, and also your Durham. And this is important because the millennial cohort who have kids right now from the pandemic are all trying to move into the entry-level freehold. It's a big demographic shift that's moving into that entry-level product. Keep in mind, this segment of the market was already the fastest moving market even before these changes. This is just going to add more demand. And the minor area where I think it could have an impact, but not like a huge one, is that the detached 4-bedroom homes that are less than 1.5 million in the suburbs are more viable. You can now get a legal 2-unit detached home in Brampton and rent it out with less than 20% down to non-permanent residents. And the ironic thing about this is it's going to cash flow. Or some of these larger homes for multi-generational families with 4 buyers on it with 4 incomes. Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, put decades of experience to work for you. Now, the next change will be specifically for first-time home buyers who can now amortize their mortgages up to 30 years, which is up from the 25. This will basically give you an additional 9.35% more buying power and make your monthly payments lower. Do you know the most messed up thing about this is right now? You only need one of the buyers to be a first-time home buyer to qualify for this. This opens it up so much for multi-generational purchases with sub 20% down. This is very common in your Asian communities and your South Asian communities. Now, here's the problem with both these rules. It's essentially encouraging home buyers to take on more debt. It's even being called out by Bank of Canada because this is going to be very inflationary. Homeowners will be ultimately paying more interest throughout the duration of their mortgage because it stretches it out, and it's not great. However, in my experience, most people will sell their home and upgrade and then ultimately reduce their amortization as they make more money in their career. While you do need 300,000 plus income to qualify like the upper echelon of these new mortgage rule changes, it's not that difficult with 3 generations of income. Currently, this is what I think the numbers will look like right now, and the green highlighted areas are the new mortgage rule changes. And you can see the monthly payment is 9.35% lower all across the board. And note, these payments are at a 4.14 mortgage rate, which is very common and easy to get right now for the insured mortgages with the mortgage premium from CMHC baked in already. And this is before rate cuts. Where I can really see having this big impact isn't actually at like the upper echelon of prices at 1.5 mil, because most of those buyers will already have 20% down and can already get the 30-year amortization. Where it's going to have the biggest impact actually is your entry-level condos. It's going to allow the young millennial who has some down payment to mobilize their RRSP, their first home savings account, FHSA, and also take advantage of the land transfer tax rebate and stretch out their monthly payment to start their home ownership journey. I'm looking at the condos that are anywhere between $500,000 to $600,000 right now, all over the Greater Toronto area, with an emphasis on subway line adjacent condos. This means that your first-time home buyer or your first-time home buyer couple with $90,000 income and $31,000 saved up for down payment and closing costs can buy a condo now. It's down from the $100,000 income you needed before. So this will have an impact. Now, do I think these rule changes are good for end users? Yes. Do I think it's encouraging Canadians to take on more debt? Yeah. Can this become a bigger problem in the future with more debt? Absolutely. Is this a moral hazard? Totally. We're just doing the usual Canadian bailout and kicking the can down the road tactic that we're so accustomed to seeing in the past. But it will have a big impact on the market because it's essentially increasing demand. Now, the final mortgage rule change that most media headlines haven't really talked about is the 30-year amortization for all pre-construction products, all mortgages, including investors. Why? Why would you need to do that? My theory is this is kind of a bailout for the pre-con market, if you ask me. While most deposit structures will have the investor at 15 to 20% deposit on occupancy already, if the investor is able to take more capital back out on closing, which ultimately makes the property cash flow negative more, but it's an option nonetheless, it's going to increase liquidity in the real estate market. And what I think it is for is it can help with the underwater appraisals as well. I don't think this is going to drive more demand into the pre-con space as it's still rather overpriced and investors are still kind of scared from the last 2 years. But what it can do is help with the closing of these pre-cons in 2025 and 2026 that were wildly overpriced. Remember, all these changes are happening now as the Bank of Canada just made its second jumbo rate cut this week, and the variable will become lower than the fixed very soon. And I talk about this impact in this video over here. And going forward, every single Bank of Canada rate cut in 2025 will make a difference to the buying power. Things are about to get interesting. I'll talk to you more in this video. Your move, your future.